All right, guys. So in today's training and live meeting, we're going over how to trade the 112 strategy and use it to make income every month, even if you're a newbie. Okay. So even if you have no experience with this, I'm going to walk you through from the very basics all the way to an advanced 112 trading pro. We're going to go through different stats. We're going to be going through numbers to understand what to expect when you're trading this strategy. So not only that, I'm also going to be going over the 6 deadly mistakes that I found most 112 traders make and how to fix them. Guys, unlike most people, I have a lot of access to 112 trades. I have over 1,000 112 trades that have been placed, managed, and closed and done through the options auto trader. And because of that, I'm able to see all these stats. And with that, I'll be able to share these stats to help you hopefully prevent from making these 6 deadly mistakes. So let's dive in and get this party started. Again, sorry if I'm kind of singing off kilter, but like there's so many of you guys trying to be admitted into this meeting. Anyways, so also if you stay until the end, as I promised, I will give you my exact 112 trading handbook that shows you exactly how to trade the 112 and includes a lot of what we'll be covering today. So it talks about the pros and cons, the best markets, how a 112 is structured, how to automate it, and goes into a lot of other things like in-depth entry. What do you look for? What do you want? And all the details about it. Hedges, the 6 biggest mistakes and how to fix them, and different other things, plus the ideal trade structure, which I will be covering in a second. So I will give you this link to this PDF for free, and you can keep it, it's yours just by being on this training. So thank you guys for being here. Now, not only that, I just walked you through it. It has everything you need to trade 112. So basically, I'm going to be doing a video teaching of it here on this training, and then I'll be able to give it to you at the end. Anyways, why should you be listening to me? Well, again, I only trade 112s, and again, I've made again, because of the most recent down day, I just wanted to show you overall what I've made so far in the last 3 months. I've made $25 or almost $26,000 trading 112s, even in this down market. So again, I kind of know what I'm doing here, and I do this, and I actually put my money where my mouth is. So again, that's one thing. But not only that, I've taught it to over 27,000 people. My 112 trading videos have been viewed over 27,000 times on YouTube, and so I'm so excited because you can't really get into all the nitty-gritty stuff on YouTube because it takes too much time. But on this training, I'm going to go through all the details here with you. All right. So again, not only that, but like I mentioned, I run the options auto trader if you don't know who I am, and I have access to over 1,128 112 trades. So I can show you the average credit you can expect to collect and all the details you want to know about the 112 and all those great details. So I'm so excited to share that here in a second. Not only that, but I've helped people like Ryan do it, who had no idea what the 112 was, and he made 3,500 in his first 30 days. Again, I'm not saying you can do that because again, you might not be able to repeat it. But again, it's someone who has taken what I've taught and put it in the practice. So has Dean, and well, I know I see Don's face on this call, and Don has too. Anyways, I just want to say importantly here, I just want to set the scene correctly. I believe I'm uniquely qualified to give you the best 112 trading on the internet, better than almost any other course or training you've seen. And I believe that because I have access to the options auto trader, which, like I said, gives me access to over 1,000 112 trades. So I can see verified trades, what is happening with these trades and how to do them correctly. Again, I was not the pioneer for this trade. That was Tom King, who made this trade big, which was awesome. But again, I think I took it to a whole nother level, and I'm so excited to be sharing that on today's training. But best of all for you guys is I think I can teach you exactly what the 112 is and how to do it and all the nuances in under an hour. So again, this training won't be too long. I'm hoping to keep it about 30 minutes. However, my goal is to sell you something at the end of this training that will make trading 112s easier than ever before. And so I'm telling you this because I believe in being honest and upfront, especially since no one in the trading space really is. And so again, I'm going to give you a massive discount for taking advantage on what I'm going to share with you at the end of this training. But regardless, what I'm sharing you on this training is something that you can take and apply and use right now to make money. And what I'll be sharing at the end of this training is purely a way to make it easier. All right, so if I can teach you everything about 112 so that you know exactly how to trade it, how to hedge your trade and make money every month without confusing you, will you give me 10 minutes at the end of this training to tell you about the massive discount on something that will make 112s easier than ever before? Let me know in the comments. Does that sound like a fair trade? Me teaching you everything I know, and you just listen to me for about 5-10 minutes about the offer that I have for you at the end. Does that sound like a good exchange? Don says yes. Cal says yes. All right, sweet. So we're good to go. All right, now oh yeah, also, but if I can't teach you this, well, then you shouldn't want to buy what I have to offer because I couldn't even deliver on my first promise. So if that sounds fair, what you guys said yes, then let's go into it. All right, but before I get into it, I do have to say the legal disclaimer. I'm not a registered broker dealer. This is for educational and entertainment purposes. If you have a question, you can ask me, but also if you have legal or financial advice, go to a professional. All right, sweet. So past failures. Some of you guys have been trying to trade for days, months, or even years, but you still don't generate the money from the market, the amount of money every month from the market that you want. And so that's the problem because you tried every strategy. Maybe you even tried the 112, and you've also tried every indicator, but you're still struggling and it's frustrating to you. And you keep asking yourself, why can others make money, but I can't? And so that's frustrating. That's why my goal on this training is to get you from I'm confused, frustrated, and tired of losing money and feeling like a failure to aha, this all makes sense now. So if I can do that, then the goal of this training has been reached. All right, so not only that, but I'm going to break this down and show you how to do this for every type of account size. I get a lot of questions. Austin, my account size is this, my account size is this, my account size is this. How should I do it? Well, I'll be breaking it down what the 112 is and how to trade it for each account. So my goal is if your account is between 10 to 50,000 to get you to making $500 a month. My goal is if you're from 50,000 to 100,000, I want to get you to 1,000 a month using these 112s. And if you have 100,000 to 500,000, my goal is to get you to 4,000 a month. Now, that's not a guarantee or not a promise, but based on everything that I've seen, I believe I can get you there with what I'm teaching today. So it doesn't matter if you're brand new to trading, if you've been trading for years, or you are an options expert, or you're just someone who wants more passive income so that you can have security around providing for your family and actually enjoying retirement. So this training will be so simple that even a 10-year-old could understand it and trade it after watching it. So let's dive in. What is the 112 strategy? Well, it's broken into 3 components. It's broken. You have to enter the trade, you have to exit the trade, and then you want to turn your trades into hedges. That might seem basic, but we're going to go down into each one. So before I get into each step, what is a 112? So I'm going to give you an object lesson here. I don't know if many of you guys did this in school, but I tend to like them, maybe because I'm a guy and I like touching things. But anyway, so our object lesson here is a solar panel. And this is one of the best ways I can think of to describe what a 112 is. Most days, at least here in Texas, it's a very sunny, bright day. And so when it's a great day, when the market is doing good, the solar panel gets charged up and it gives us the ability to make consistent income, or in the solar panel's chance, make consistent energy to put to the battery. So when it's a nice sunny day, the solar panel takes the sun and charges the battery. And now what we see is on a bad day, when there's no sun, when there's a storm, that battery has been charged. And now we still have energy that can be used because the solar panel charged the battery. That's exactly what we see with a 112 trade. And when we're in our normal everyday markets, it's just producing energy. It's making money and it's cranking out great returns for us. But when the market turns around, if we set up our 112s correctly, not only has it paid us out money, but it's also put this money into hedges, that when we have that storm, when we have that market crash, that 112 can pay out even larger using the battery of reserves that it's saved up. So again, let me just explain this in one other way. We have the sun, which gives the solar panel energy, and that's how we get energy. It's the same thing with a 112. In a good uptrending market, you put a 112 on that and it produces good income. But not only that, that income also transfers into hedges, which then, if we have a stormy day or a storm for a week, then the battery can be used to still give us energy. And that's the same way it works here. When we're in a downtrend, if we trade these 112s correctly, they can pay out 4 times the amount of money they would normally pay out if we structure it correctly. So my question to you is, does that make sense? For those of you who are like, Austin, I've never heard of a 112, does that high level overview makes sense? If the market is going up, you're going to print money. If you do it correctly, when you have a down market, you can get paid out even more. Is that making sense? Absolutely clear. Perfect. Liam, love it. Yes. Okay, cool. Just want to make sure that makes sense. That was my first time using that as an object lesson. Now, let's dive into these specific rules for it, okay? How do we enter it? Well, entering the trade correctly is the most important step. If you mess up how this works, then you're going to put on a different trade that's not a 112, and you could lose thousands. I've seen that happen to a few traders where they try to put on a 112 trade, but they do it incorrectly, or they structure the strike prices wrong, and then they lose thousands, and I don't want that to be you. So make sure you pay attention to this, okay? So again, this is a complex option strategy, which is why most people don't do it, because it's confusing. And if you mess it up, you could easily lose $1,000 to $10,000 in an hour. And yes, I've personally seen this happen from people who put on the trade wrong. So make sure you pay attention to the exact rules, and let's get this party started. So a 112 is made up of two different types of trades, okay? And so what I love about this is that we can actually break down what is going on here. And so if we're looking at this, what we see is that a 112 is a short put at the base of the trade. For those of you who don't know what a short put is, I can explain it in a very simple way. A short put is betting that a stock will stay above a certain level. That's all it is. So you're saying, hey, the stock is trading at 100. I bet the stock will stay above 50. If it does, you make money. That means if the stock goes up, you make money. If the stock goes down but stays above 50, you make money. So a short put or a naked put, that's what it does. Next is also a put debit spread. So the 112 is a short put, but it's also a put debit spread. So what is a put debit spread? It's essentially a trade that makes money when the stock goes down. And when we put these together, that's how we get this amazing trade that makes money when the market goes up and goes down. So let's look at this. A short put makes money as the market goes up because we're betting that it'll stay above a certain level. And so let's say we're bet it stays above here. Well, the stock continues to go up and gets further and further away from that level that we picked. And so we make money that way. Now, a put debit spread makes money to the downside. This is a defined risk trade where you'll only make the same amount of profit, but as the market goes down, you'll have a profit. And so when we put these together, we get a 112 trade. Now, when we're entering this 112 trade, what's the best way to structure this? Well, the duration that we see is 60 to 120 days is best. What does this mean? When you're entering a trade, you need to pick the expiration date. How far in the future do you want to trade this? This means when is this option going to expire? And that is going to be between 60 and 120 days. So between 2 months and 4 months is when you should be putting on this trade. In a second, I'll give you the data behind every duration so that you can see which one you want to do, because it changes based on how long or how far in the future you go. Short puts, 7 delta. So the base of our trade are these short puts. We do 2 short puts. And when we do that, we do roughly a 7 delta mark. So again, we want to be between 5 and 10 delta, but I find 7 delta is that best level or the ideal level. And so again, the 7 delta is where you want to put those short puts. And then again, with the put debit spread, you can change this a lot. And we could have gone into a whole hour lesson on how we structured the put debit spread. But basics, 25 delta and 23 delta. You want to buy the 25 delta put and sell the 23 delta put. And this will create a put debit spread. Now, the wider your put debit spread, the strikes between the two deltas, the distance between will give you more downside protection, but it'll also make it so that you don't make as high of a profit, because in the options world, everything is balanced. Either you get more downside protection and less profit, or less downside protection and more profit. So you kind of have to judge. But what I found a great starter level, and one that I always trade, is this. You sell to 7 delta puts, and then you do a 25-23 delta put debit spread. Next, what are the best assets? ES, MES, CLGC. Later on in this training, I'll break down which ones you should do at which times based on your account size, but these are some of the best options because they're liquid and you only trade 112s on futures. All right, those are the entry rules. Now let's break down, when do we use each duration and what does that mean? So if we're looking at the 60-day one first, okay, like I said, we can do 60 to 120 days. 60 days, this would be a shorter term one. And when we're talking about short term, or when we're talking about options that are closer in, what we see is that we collect less credit. Because over time with options, those options decay, and that's how we get money. And so again, if we're 60 days, that means time has already decayed on that option for a while. So we're going to make less money. But at the same time, it's also more risky because you have less time for the stock or the futures to move in your direction. So therefore, the risk is higher. So it requires more buying power. So on the shorter end of duration, we're making less profit and we have more buying power. So again, if we're looking at an average 60-day trade for a 112, we can make about $1,300 if we let it go to expiration. Our buying power is about 10,000. So if we look at our profit to buying power percentage so that we can compare each duration, we're looking at 13.7%. Now, if we go to 90 days out, we're going to collect more profit. It's going to be lower buying power because the risk is lower, and that's going to put our profit to buying power as 20.7%. Also, we have 120 days out. So we have 2 months, 3 months, and 4 months. Our profit here is higher because there's been less time decay, so $2,000 per trade. And the buying power is lower because we have 4 months for the trade to work out in our favor. So with that, we get a 27% profit to buying power ratio. So if we're looking at this as purely, how does my money make the most money? AKA, if I can put in this much money, how do I know I'll make the most from it? That is going to be a 120-day 112. So if we're looking at this from purely a return standpoint, your 120-day 112 trade is going to be the safest because you have 4 months for it to work out in your favor, and it's going to make you the most money because it's making you 27% on the money you put in. Now, what we do have to consider here is when we put on take profits or when we take the trades off early because they've hit our take profit target, then we need to factor in how long we've been in these trades. Okay, so if you're doing about an 80 to 90% profit target on these trades, which means that once you made an 80 to 90% return on your trade, you close it, you're looking at being in these trades for about half the amount of time as duration. So this trade will be in about 30 days. This trade will be in about 45 days. And this trade will be in about about 60 days. Sorry about that. So 30, 45, and 60. And so now if we're thinking about it, for 45 days, I get roughly 20% return on my money. That's amazing. For roughly 60 days, I get about 27%. But we have to factor in there's a 15-day difference between these, right? Between the 45 days and the 60 days when we'll close the trade. And so with that, we'll have time to close this 90-day trade and then put on a new one and start making another 20% return on our money. Now, I hope I'm not getting too in-depth, but what I found is that the 90-day works best, because it's the good middle ground of the profit we're making, the buying power we have to put up, our percentage, but also the ability to close the trade faster so we can put on new trades and diversify our risk across time. Does that make sense? Let me know in the comments section. Does the entry rules make sense? Again, you can pick the 60, the 90, 120. I don't care. I just want to show you what each one does and how they work so that you can pick the one that best works for you. I personally like the 90-day, as I just explained. But again, that is what to look at for each. So RU Kane says yes. David says yes. And Jim says yes. So all you guys are following. That's perfect. Awesome. Good. Sweet. All right, next, let's talk about exit rules. We talked about how to enter, how to structure it, and what each one means. Let's dive into exits. Exiting a trade is where all the money is made. Again, when you enter, you collect credit, but if you don't exit the right way, that's how you actually actualize your profit. So if you don't exit at the right time, you might take a loss instead of a winner, which we don't want, or you could close a trade too early and not collect enough money to offset any future losses. I know when I first started trading, I was like, oh my gosh, I made a profit. And so I would take it, but it was so small that when a loss came, it would offset all my winners because my winners that I was taking were way too small. And so here are the exit strategies that I found worked best based on my time trading 112s and also the data that I have access to. Next, actually, we can split these exit rules into two different categories: stop losses and take profits, and I have the data for each one. So let's dive into it. First off, with stop losses. So if we put 100% stop loss on this, that means that if we enter the trade, and let's say we collect $30 in credit, that means we'll exit the trade once the trade is now trading at $60, because that means we've had a $30 difference between where we were. That's 100%. And so that's where we'll close the trade. So if we're doing a 112 trade like this, back tested over the last 10 years, we're looking at an 81% win rate. What does this mean? Guys, the smaller your loss percentage is, so for instance, 100%, the more likely it is to get hit and the less you're allowing the trade to actually play out. As we just saw with the market crashing this week, we need to give our 112s ample space to breathe and move. And so a 100% stop loss would work for people who are afraid of having big losses. And so that's why I want to present you with every option you have and then show you the best one that I found works. Okay. So 100% stop loss on these trades will give you an 81% win rate, and your average loss will be $2,600. So $2,600 per loss. Now, to be clear here, I'm talking about the ES futures. So again, if you're trading if you were trading MES, think a tenth of this. So think $260 would be your average loss. All right, moving on. 200% loss. This is what I typically recommend. And so here we're looking at a 91% win rate. So already by adding another 100% on our stop loss, we go from an 81 to 91% win rate. So that's awesome. Let's keep it that way. And then we go to an average loss of 4,700, or if you're trading MES, basically $500 per trade. So again, that's still a decent loss. But if we factor in that we're making about 1,000 or so per trade, then that means we only need 4 trades to offset one loser. And with a 91% win rate long term, this is going to be incredibly profitable. Guys, I see your questions in the chat, which is awesome. Just know that there is a Q&A section at the end of this. All right, next and final for the stop loss options is 300%. This again gives you a lot of room for the trade to move. And so with that, we're looking at a 94% win rate. And so when we're looking at that 94% win rate, it really bumps up our win rate. But with that, we're also increasing our losses to about $6,900 per trade. So again, you have to judge for yourself what you want to do based on your win rates and based on the average losses. So again, I typically pick a 200% stop loss as mine because I get up in my 90% range without having to take as big of a loss if I did 300. However, if you're going to do a 300% stop loss, make sure you're hedging, which will be the next step I talk about in a second, and also understand that your losses will be bigger, but you will survive more downturns, right? Like this market we've seen, our trades, I have a trade right now that's even down 150%. So it is very close to this, but if I was at a 300% stop loss, then I would be fine, right? And so again, you have to judge what works best for you. But again, I personally like the 200% stop loss. Next, how does this affect take profits? All right, so let's assume that we're doing the 200% stop loss. All right, that's what I'm basing this off of. Okay, I'm basing these take profits off of the fact that you had the 200% stop loss. Okay, so if we have a 200% stop loss, and then we add an 80% take profit, which means we close the trade once it hits an 80% win rate, or profit target, then we'll have a 93% win rate with an average win of $1,600. That's awesome, right? And we went from a 91 to a 93% win rate just by adding a take profit. Next, if we go to 90%, we're looking at a 92% win rate. So our win rate is slightly lower, but we collect more money, and that's just the trade-off that you always have. And then next is a 95% profit target, which is a 92% win rate, and then you make $1,900 for an average win. Obviously, here I recommend the 80% because I personally love to prioritize win rate, and so again, that gives me this. But however, here's your data for deciding what you want to do with your 112s. Almost like it doesn't really matter how you structure a 112 outside of having 100% stop loss. I wouldn't do that, but you can change and use any one of these settings and the 112 will work well. And so I want to present you with all the data so you have the best decision to know what you should do for your account. But this is what I recommend: a 200% stop loss and the 80% profit target. All right. Is that making sense so far? Exit rules with the stop losses, the different levels you can do, the take profit with the different percentages. I know I'm getting very into the weeds, but I want to make sure that I'm making sense, especially for those of you guys who are newer to 112s. Michael says, yep, makes sense. Kenny gave me a thumbs up. Thanks, Kenny. All right, sweet. So we're on track. I'm not losing you guys quite yet. All right, step 3 is hedges. All right, David said yes. Okay, hedges. Trading 112s has the potential of turning into large losses, tens of thousands of dollars. As I just showed you, if we use a 200% stop loss, we're talking about almost a $5,000 loss per trade on average. And so if we have multiple of those trades going, we could lose $15,000 to $20,000 quite easily. So let's talk about how to hedge. A stop loss will help limit the losses, but a good hedge will help offset all the losses and even leave us with a net profit. So there's a ton of different hedges that the 112 can be turned into, and if done incorrectly, will result in a huge loss, because you can turn these 112s into hedges, but if you don't turn it into a hedge correctly, you could mess up the trade, and then instead of having a hedge, you actually have a huge loss. I just saw that on somebody's account. They tried to convert it into a hedge, but they closed the wrong one, and they left themselves with all short puts, and that literally went very bad when the market crashed. So make sure you pay attention on how to do this correctly. First off, let's set the scene. What are hedges? Hedges are insurance. That's all they are. When we're scared of something bad happening, we buy insurance on something. And that means that it's not going to prevent it from happening, but if it does, at least we get some money from it, right? If we die, well, then our loved ones get money. If our car gets wrecked, we get money so we can get a new one, something like that. But the way that insurance works is you pay it and then you never look at it again. And so that's the way I want you to look at hedges. You're paying money for these hedges, and then you never want to touch them again. Just let your hedges sit there and work for you and give you protection, and don't try to manage it and optimize a hedge. A hedge is like insurance. You pay it and you let it stay there in the background, and you pray that you never actually need it. So that's what a hedge is. So with the 112, a 112 can be turned into two different types of hedges. That's a ratio hedge and a put debit spread hedge. So a ratio hedge will give you the greatest downside protection because you can make upwards of $20,000 from a ratio hedge. But because it gives you so much downside protection, it also costs a lot of money. However, when I'm talking about costing a lot of money, when you convert a 112 into a hedge, you're not actually paying money. You're just giving back some of the profit you made. So the 112, let's say it makes you $1,500. Well, now you're giving back about $1,000 for this hedge in order to get $20,000 of downside protection. So you're using the profit you already made to create a hedge that's now essentially free and giving you downside protection. Now, a ratio hedge is created by closing the short legs. The short leg of the put debit spread. So the 112 structure that I discussed, right? We buy the 25 delta, we sell the 23 delta, and then we sell 2 of the 7 delta. Well, we're going to close that 23 delta, the short put of the put debit spread. We close that converts it into a ratio hedge, which gives us a lot of downside protection and will cover us to a 20 to 30% market crash. We will be covered. Now we also have a put debit spread. This gives us a smaller amount of downside protection. So we go from about 20,000 here to about 2,000, but it costs a lot less. It only costs about $200 to $500 to have a put debit spread on. So AKA that's taking from our profits. So it takes a lot less money to put on. But again, at the same time, it's the pros and cons. We don't get as much downside protection. And this is done by closing the 2 short puts. So the two 7 delta puts, we're going to close out, and that will leave us with the put debit spread. So here is the ideal 112 trade structure. Again, I've showed you all the stats, so you can pick and choose how you want to trade it, but this is how I like trading it. The duration or days until expiration is 90 days out. Short puts of 7 delta, a put debit spread of a 25-23 delta, take profit of 80%, stop losses of 200%, and hedges. Use a ratio hedge and then put debit spread hedges. Does this make sense? I would say this is the ideal 1-1-2 trade structure. If you take your trade profit to 90%, that's fine too. But something like this, I would say with a 200% stop loss and structured this way, I would say is ideal. Now, again, I showed you how to adjust it if you like less risk or more risk, so you can do that. But this is how I personally trade it. All right, does that make sense? I think so, right? I'm pretty sure this makes sense, so I'm pretty sure I can continue, but I just want to clarify real fast before I do. And then if this makes sense, let me know in the chat. Liam says, yes, sir. All right, sweet. This is all making sense, so I can get into the 6 biggest. Kenny says yes. Parker says yes. All right, awesome. So that is the basics of what a 1-1-2 is. Now, what I'm going to discuss is what most people tend to do wrong with them, okay? So this are the 6 deadly mistakes that I found most 1-1-2 traders make and how to fix them. Again, this is based on 1,000 1-1-2 trades that I have and see through the Options Auto Trader platform. Mistake number 1 is hedging. And how do I know this is the biggest deal? Because number 1, this is something that I have not done correctly all the time, but also I've seen a lot of people doing this wrong, especially with the market pulling back recently, okay? At the bare minimum, you want your hedging to balance out, okay? You want your account risk to balance with your hedge protection. What in the world does this mean? You want your total account risk, the sum of all your open trades hitting their stop loss, that risk to match how much profit you can make from your hedges. So let's give an example. Let's say you have five trades on, and each trade will close out with a loss of $3,000 if it hits your stop loss. So 5 trades at $3,000 loss per piece, we're talking a $15,000 loss, okay? That is our account risk. Now, our hedge protection, the amount of hedges we have on, should give us protection for at least $15,000, if not more, okay? So we need to make sure our account risk, all our trades hitting our stop losses, that sum, whatever that total is, equals the number of hedges that we have on. If they don't, you might want to put on a manual hedge, or you might want to close a 1-1-2 trade early to give you another hedge. Now, again, I'll show you how in a second you can change your hedging based on market conditions. But right now, in our current market that we are in, all-time highs, the need for hedging is the highest it will ever be. A market crashing at an all-time high level is where it happens. The market's not trading sideways or at the lows and then crashes. It does, but very rarely and not far. Where we see our biggest crashes is when we're trading at all-time highs, which is what we're doing right now in the market. So make sure that your account risk and your hedges are balanced, and if not, your hedges are even outweighing it a bit. Sounds good? Please make sure to do that because it's going to save you a lot of headache. If you don't know how to tell how much money your hedges will make you if the market crashes, that's why I put this in the Options Auto Trader. You just click on the hedge button and it shows you how much protection you get for your hedge. So you can kind of sum all those up and see what is going on. Okay, now let's discuss, when should we be hedging in different market scenarios? Well, again, we can make this very advanced, but for the sake of this training, I wanted to keep it simple. We all know, hopefully, what a 200-day moving average is. It looks at the last 200 days of price and it averages it. So this middle gray line right here is a 200-day moving average. Basically, people look at this to determine if the market is in an uptrend or a downtrend. If the market is above it, it's bullish. If the market is below it, it's bearish. That's exactly how this works, okay? Now, if the market is above the 200-day moving average, I recommend one of 2 things, which this is where the market is now. Have at least one ratio hedge on. Always have one ratio hedge on. Make sure to have one because that gives you the greatest amount of downside protection. Literally, just one ratio hedge will give you $20,000 to $25,000 of downside protection, which could cover 4 to 5 trades. After you have one ratio hedge on, convert the rest of your trades into put debit spreads. Or just turn all your trades into ratio hedges when you're above and trading at all-time highs. You'll still make a good profit. You'll still make 10 to 15% return on your money, even factoring in the hedge cost. So you still make a great return, but you're going to give up some profit. But now you won't have to stress when something like what the last few days happens to you. Okay. Next, if we're below the 200-day moving average, we don't have to put on a ratio hedge unless you want to. You can put debit spread hedges, or you could even just close the entire position. So that's how I would hedge based on market conditions. But where we are right now, make sure you have on some ratio hedges. Or you could even just go out and buy a put, because that would do good too. All right, guys, we'll be doing a Q&A at the end, so make sure you save your questions for that, because I'm just going through the training right now. Mistake number 2 is getting bored. I see this way too many times. So many emails that come in of people trading 112s. And then they're like, okay, so I have this 112, it's doing well, it's making me money. Now I want to try zero DTE, or I want to try credit spreads, or I want to try this, and they're jumping to other strategies because, yeah, I get it. 112s are boring, right? They take almost a month to actually hit the profit. They're very consistent, they're very slow, and you're like, you get bored with it. But this is where the money is made. And you want to keep compounding your growth in a 112, and you don't want to get bored and do something else like a zero DTE. Why? Because so many times I see people try a zero DTE strategy because they're bored of the 112s. And then from there, they have these zero DTE losses that basically all their 112 profit is going to paying off the zero DTE losses. So guys, if you're trading 112s and you see it working, then just stick to it. Okay. Next is mistake number 3. This was big in this recent pullback, is over leveraged accounts. Guys, I don't know if you're fully aware of this, or you probably experienced it this week if you're in some trades, is when you're trading futures, which is what we're doing here, we're selling options on futures, we use span margin. This is variable margin. This is margin that increases based on market risk. So as the market has dropped, my buying power required on my 112 trades went up like $10,000 to $20,000. So guys, you need to have money set aside to handle that increase in buying power. And that is why I've always said, and I need to make sure you guys stick to it, is trading with no more than 50% of your account value. So if a $10,000 account, only have $5,000 in trades. That way, you leave yourself another $5,000 to allow that buying power to increase so that you can stay in these trades and see them through. Okay, so make sure you are not over leveraged. Make sure you're doing 50% or less. This again also can go back to market risk. When we are at an all-time high, that is the scariest point we can be in a market, because the chance of it crashing is a lot higher. And so with that, we need to make sure we're sticking to our buying power. If we're trading at the lows where volatility is already high, then that span margin is already priced in. And so we can do maybe about 60 or 70%. But where we're at right now, trade no more than 50% of your account, and this will save you a lot of headaches. So what does this look like for each account? If you have a $10,000 to $50,000 account, this looks like trading an MES 112. You don't have money for ES yet, so don't worry about it, but you can do MES and still make good money. You'll be entering one to two times a week, depending on the account size. If you're at 10,000, it'll be once. If you're closer to 50, you can do 2 and maybe 3 times a week. Your position sizing will probably be somewhere between 1 to 5, which means you'll be doing a 112, or if you're doing 2 of them, a 224 or a 336 or something like that. So your position sizing will be between 1 to 5. Next, if you have a $50,000 to $100,000 account, you're trading on ES, so ES 112s. You're entering once a week, and you should cap your positions to trading in only one size. So you're going to be 112 once a week, and you can do that with a $50,000 to $100,000 account. If you have a $100,000 account plus, this is where you start scaling. You'll trade ES. You'll trade 2 times a week. You'll do 1 to 5 on your position size, and then you'll slowly start to expand into more assets from there, like CL and GC for diversification. Now, again, if you're not over 100,000, just trade MES or ES. You don't have to worry about diversifying yet. All right, does that make sense based on account sizes? I hope you guys are understanding. This is how you want to limit your control. So many people, thanks for the thumbs up, Don. So many people over leverage accounts, so I want to make sure that you're not one of them. All right, Next, mistake number 4 is worst case scenario. Not enough people do worst case scenario planning. I have this way that I predict when the market is going to crash, but as I mentioned in all my trainings, it's roughly a 90% success rate on that. As in, we're not going to get you out of all crashes. Like, look, it got you out of the 2021, and I say that because once the market breaks above this range and then comes back down, that's what signals a crash. And so again, you can see here it would have signaled here and it would have signaled here, but it would not have signaled here. And so you need to understand that there's always worst case scenario planning. So whether you're using this crash indicator or not, there's still a chance of the market crashing. So hedge, do buying, make sure you're in correct buying power and all those rules to keep your account safe. Again, if you want to use this crash protector, which I'm using, again, you can enable it with one click in the options auto trader, which I'll be talking more about later in this training. But let's say, Austin, the market's crashing or at least pulling back right now. If I'm starting to trade 112s right now, how do I do it? Okay, well, first off, now is the best time to put on a 112 trade because volatility is high. You will collect a lot more credit and your strike prices will be way out. However, you will be at a higher chance of risk because the market is moving a lot. And so what I want to say, if you're trying to get into 112s right now, you might even want to, I know this goes against my ideal strategy because we're not currently in an ideal market, so we do have to change a bit, is do a 120-day 112. The further out in time you go, the less sensitive the options price is to stock movement. And so if you go out to 120 days, you'll still be collecting a lot more credit, making more money, and at the same time, you have less risk. So if you're trying to get into 112s right now, I would advise or recommend, I can't advise, just kidding, I recommend, do your own research, that you go out to 120 days because you'll still make good money, your buying power will be low, and you'll have less risk, but you'll still have some market exposure. Also, take the credit that you received. Let's say you make $30 when you enter a 112. That's a $1,500 profit or money that's being added to your account by selling this. And so take some of that money and immediately go put on a hedge. So here's my example. If you're currently trading in ES 112, like you just go right now at the end of this training or tomorrow during the market hours, and you go and you put on an ES 112, then go and put on an ES put debit spread in addition to this trade, because a put debit spread will give you about $2,000 to $3,000 of downside protection, and that will cover the risk of this hitting the stop loss. Or you can go to MES, put on a ratio hedge, and that will give you about as much protection as this hitting a stop loss would. Remember, you want to balance out those trades, and so this is how you can balance out an ES 112 trade. I hope that makes sense for those of you who guys, you're like, wow, the 112 seems cool, I want to do it, but the market is red. How do I do it? This is how you would do it right now. Prioritize 120 days out and put on an additional hedge, since there is no hedge right now yet to protect the 112. All right, mistake number 5, but 2 more to go. Not using stops. All right, so when I played this out in the data in the back test, based on our ideal structure, being the 7 delta 25 23 7, if you do not have a stop on your trade, obviously your win rate goes up, but your loss is now sitting at roughly $14,000. So with a 200% stop loss, you're sitting about 5,000. So we're looking at 5,000 compared to 14,000. No stop loss, stop loss. Now, what does this look like when we play out the expectancy numbers? So again, we can see here, I'm going to use this for an example. This is a real trade of mine. And I kind of want to break down these numbers here. So again, we're talking about following our structure. We have roughly a 93% win rate on average. We'll make $850 if this trade wins. If we lose, we'll lose about $2,125. So this is the 200% stop loss level. Okay. This is just a real trading example. So if we do it like this, then long term, we will see a net profit of $641. This means 100 trades out, we're going to be making money. Expectancy shows us if we will have a winning trade based on our profit, our loss, and our win rate. So this is a very high expectancy ratio. When I was trading credit spreads in the past, my expectancy ratio was about $10. This one's $640. So this is a really good, really profitable win rate and expectancy number. Now let's look at what happens with the stop loss. Again, what I love to see here is when we have no stop loss, we still have a really great expectancy number, but it drops, okay? So our win rate goes from a 93 to a 96 because we let the trade play out more, but our loss goes from 2,000 to 10,000. And this gives us a long-term expectancy of $416. So what we just see here from a numbers perspective, so that long term, it's more profitable to have a stop loss, and we don't have to deal with the emotional chaos of having these really big losses. So make sure you always have stops. That means if you're trading them manually, then you watch them manually. If you're using something like the options auto trader to automate it, make sure you don't mess with those stop losses and let them stay there to protect the account. Last but not least is number 6, emotions. So many of you guys love to be like, yeah, I love the 112 because it's so consistent and profitable. But as soon as the market starts turning around, you're like, can I adjust it? Can I change it? Can I trade it? No, just let it play out. And so guys, 112s work out long term. You've seen the numbers, you know it works. I've done it. You know people who've done it. This is a very popular strategy. If you're watching this video, you've seen other YouTube videos on it as well. It's a great strategy and it can work for you. But make sure you don't mess with it by trying to close trades early, by trying to extend stop losses and things like that. Just let the 112s play out. All right, so this ideal 112 trade structure that I showed you has worked for so many people. It's worked for people like David. Again, he says here 2 weeks and into doing this ideal structure, he made $7,500. People like Nicholas, who has made $340 on his small account, which he absolutely loves. Again, you know, it's a small account and he hasn't been doing much. It's just working for him. That's how amazing the 112s are. Neil, he made $1,300 in his first month of trading 112s. Rich has made $20,000 with it between, you know, credit spreads and the MES 112s. I'm so sorry. He had a $20,000 account and he made $2,000 in his first month. So guys, this works. Look, this is by far the greatest options trading strategy. I just want to tell you, if you're not on board yet, this is great. And so go out tomorrow and start doing it if you want to see a way to make consistent money. But the truth is, most of you sadly won't get off of this training and actually use it. I'm curious, who here in the comment section would say, Austin, I love this, I learned it, and I'm actually going to go put this into action. Let me know in the chat box if that's you, because I want to see who actually wants to put this into action. All right, we have Praveen, AC, Michael, Liam, Steve, Walt, Whitman, Taman, John. Wow, a lot more people. Okay. Todd, Richard, Chris. All right, sweet. So we probably had about 15 people there out of 82 people. So that means not everyone's going to do it. That's fine. I don't expect everyone to do it. But if you're not going to do it, I want to speak to you for a second. You're probably not going to trade the 112 because of one of the following reasons. Either you don't believe in me. You're like, Austin, this doesn't make sense, which honestly is fair. But I've showed you a lot of data. There's a lot of people here who are doing it. So I don't think that's the reason. I think the reason is you don't believe in yourself. And I think it's that because of a lot of reasons. You think you'll mess up the strategy. You think you'll enter at the wrong time, select the wrong option, turn it into the wrong hedge and end up with tens of thousands of dollars of losses, right? Which could happen if you do this incorrectly and you're scared you might do that. Or you think you can't pull it off because you don't have the time. You have work, you have family, you have kids, and you don't think you can do it. Well, guys, here is the way that you can trade 112s right now if you're doing it manually. Right here, we start here. You need to monitor the market and look for a good entry. Then you assess your buying power. Are you under 50%? Then you pick and structure the right trade. You enter the trade. Then you constantly monitor the 112 trade for your stop losses, for your take profits, for your market crashes. Then you exit the trade once it hits your stop loss or take profit. Then you assess your buying power and you restart this whole process. This can take hours and hours every single day and take up a lot of mental space and drain on what the market is doing and how to manage your trades. It can take a lot of time and put a lot of stress on you. And so this is the hard way if you're trying to trade the 112 trade manually yourself using a computer and clicking the button. It takes a lot of time, okay? So if you're doing it that way, if that's the case, then are you okay if I show you quickly an easy way to trade 112s that doesn't require any of your time or energy, and a way that picks the perfect strike prices and options every time? A way that enters and exits the trade for you, hedges, and generates profits for you so that you can spend time with your family instead of trading. Are you guys cool if I show you a demo real quick of the options auto trader and how you can put this 112 into practice based on all the data and structure that I showed you here on today's training? Let's see who here says yes. We have Liam says you bet. All right, sweet. So, okay, we have Mike saying yes. Want to make sure we have more than one yes. Praveen, yes, yes. Okay, cool, sweet. So let me walk you through a quick demo and I'll show you actually how to automate the entire 112 process in a way where it's going to be so easy and you don't have to worry about a thing. All right, so obviously here, this, if you haven't seen it before, is the options auto trader. It's the only way to automate a 112 trade on the internet today. There's no other software that supports this, but we do. This was literally a software built by me, a 112 trader for 112 traders. And this is all you need to do. Click on create an auto trader, connect your broker account, and then we're going to create an auto trader from scratch so I can show you how you can customize this. Again, we can do so many different types of strategies, but today we are talking about the 112. So we're going to pick on that. Now, let's structure this trade. Remember how I talked about based on your account size, if you should be trading MES or ES, this is what you would look at. Now, for this example, I'll just do MES just to keep this example. Like I said, 90 days out is our ideal range. It kind of preloads the best practices for you here. But if we're starting to enter 112s tomorrow or tonight, whatever it is, then I would say push your duration out to 120 for now. Okay, this will just help kind of offset some risk and kind of help you weather the storm that we're in right now. A 90-day will still be fine, but you'll see more losses on a 90-day trade versus a 120-day trade. So this is just for your mental and emotional well-being, but a 90-day works as well. Next is we have the 25, 23 deltas. So again, if you're like someone awesome, when I look at an options chain, it makes no sense. I have to pick the expiration date, the strike prices, the deltas, and all this stuff. Well, here on the options auto trader, you just put the deltas you're doing, and which I've told you is 25 delta, 23 delta, and then again, we'll change this to 7. 5 delta is safer, but we can do 7 for now. That's how we structure the 112 trade. From there, we're going to define how often we're going to trade it. And so by that, I mean how often we enter the trade. And so from there, that looks like this. We're going to enter once a week if we have a smaller account, or we can enter in multiple times a week and do it Tuesday and Thursday or something like that. For the sake of this, I'll just say we're going to enter in once a week on Wednesday since that's the middle of the week. So it's pretty standard. Next, this is where we determine kind of what we want our win rate to be. We can pick between an 80 to 90% take profit, which I showed you the numbers on. So let's say 80% here, because that's what I like to go with. Stop loss, I would say between 200 and 300%. Just for the sake of this, I'm going to put in 200 because that's what I currently have on mine. Early management can be avoided. This is for if you want to close the trade early. And then again, this is the magic right here. Once it's hit your take profit zone, it will turn the trade into a hedge for you automatically. So now, not only do you not have to watch the trades to exit them by yourself, if you're doing it manually, which takes a ton of time because you wake up in the morning, you check your phone, during the day you check your phone, at night you check your trades. Not only do you not have to do that anymore, but will also turn the trade into a hedge for you. So you can pick between a ratio hedge, a PDS hedge, or just close the entire trade. Right now, you definitely want to be turning these trades into a ratio hedge, so I'll put it there for now. Perfect. Next, how much money do you want to allow this to trade with? Remember, we want to stay under 50% of our buying power. So if we have $10,000 in this account, we would put 5,000 here. This is the only strategy we are running. Okay, so that's how we do it. Save and continue. Now you can see it shows you your approximate numbers. It takes about $800 to put this trade on. Based on your 80% profit target, you'll have about a $96 return. And based on a 200 from the stop loss, you'll lose about $240. So that is what this looks like. Does that make sense? How easy it is to set up the 112 completely automated for you. Now it will enter for you, exit for you, manage your hedges, watch your trades every 3 minutes, and so that it can stay up to date and make sure that you're secure and safe. Now, again, not only that, but it shows you so many amazing things about your trades that you can't typically see. And what I love about that here is this, is it shows my trades that are hedges. It shows me how much hedge protection I have, so I can make sure I have on enough. And then it also shows me my current trades and where that trade is sitting, how close I am to my stop loss, how close I am to my take profit. And not only that, because this is built for 112s, I can even see when I'm in the bear trap. Guys, I know I didn't explain this, but you see this little green zone right here? At expiration, if the futures trades in this range, I make 3 times what I normally make. I typically make $1,000 on these trades, but if it's in here, I'll make $3,000. And as you can see right here, this trade is currently in the bear trap, which means that it could make me $3,000 to $4,000. And so now I know that this trade could do that as it gets closer to expiration. Obviously, I have 84 days left on this trade, so who knows? But again, that's what we get to see with all the data for the 112s. All right. Do you guys see how awesome this is, how cool the auto trader is, and how it can help? I know we have a lot of auto trader members on here, so I hope you're able to use this data and put it in to the options auto trader and use it to automate your entire strategy and also provide some protection for you. All right, I realize, yeah. So wasn't that super easy? Do you guys like the options auto trader? Does that sound cool? Let's see. I'm curious for people who have never heard of it. I mean, I know we have a lot of members here. To see what you guys think of the options auto trader. AC Evans says, yes, it was easy. Frank says, very nice. Sorry, taking a sip here. I'm not used to talking this long. Kenny says, you know which brokers this automated system works with? Yes, I'll get into all that in just a second. So yeah, Connor says, yes, sweet, perfect. I'm glad you guys make sense. So no longer do we have to trade 112s the hard way, which means no longer do we have to constantly watch the market, turn it into hedges, and do anything like that. Now we can do the easy way, which is taking the 112 strategy, plugging it into the options auto trader, and allowing that to print money for us. Now, again, that doesn't mean we're not going to have losses, but it does mean we remove the emotion and we let it do it for us. So with the options auto trader, we can turn any strategy into a into passive income. So whether you like the 112 or not, or use something else, like you sell puts or calls, you sell strangles or straddles, you sell ratio spreads, 112s, 111s, 113s, credit spreads, iron condors, iron flies, you do futures options, stocks options, ETF options, whatever you do, the options auto trader can support it. And this works for people who are option sellers who have a strategy, who don't have a strategy, because you can use one of our proven templates. It's people who work who have a complicated strategy or a simple strategy, or it works for any option seller who genuinely wants to automate their trading, generate passive income, and reclaim their time back from being stuck to the screen 24/7. Now, here is what I was saying. At the moment, in order for the options auto trader to work for you, you must have at least $5,000 because you need to have a margin account. You need to be approved for futures, and that's about the $5,000 mark. And you also need to have a Tasty Trade account. So if you have a Tasty Trade account with at least $5,000, you can use the options auto trader. And so again, if you're ready to start using the options auto trader, then I have an amazing offer for you. So guys, are you cool if I show you the amazing offer for joining the options auto trader today for those who are interested in automating the 112? I hope I did my part of this training, which is showing you everything about the 112, how to trade it for your account, and how to how to do it, so that you can just listen to me for the next 10 minutes about the offer that I have to share. If you guys are okay with hearing that offer, please let me know. If not, we can end the training here, and that's fine. But again, I only want to move forward if you guys say it's okay. Frank says yes. Kenny says yes. Okay, cool. So let's dive into it. So I'm going to make you a massive deal on the Options Auto Trader Pro plan today. And so what do Pro members get? You get 10 auto traders. So again, you can do a 1-1-2 strategy. You can do ratio hedges. You can do credit spreads or anything else you want. So 10 traders, which would be more than enough for you. You'll get 3 broker connections. So you can add your normal broker, your IRA, your 401k, if that's possible, things like that. You can add up to 3 different accounts. And then also $100,000 per auto trader. So this should be good for everyone here. Also, you'll get access to priority support, email, live chat, and Zoom. If you ever get stuck, I am here to help. Don says, I totally support the auto trader. It's an excellent options profit builder. He's had it for 4 months. Well, thanks, Don. I really appreciate that. And so much more you get as being a member, like being able to hang out with cool people like Don. Okay. You'll also be able to automate selling puts, 1-1-2s, iron condors, credit spreads, and any other options selling strategy. You'll be able to get rid of the headache of manual trading. The amount of time it takes and stress it causes, you can finally get rid of that. You can get rid of any options alert subscriptions because you no longer have to follow alerts because the system will do it for you. You can get rid of any charting software because you no longer have to look at charts unless you want to. You can get rid of losses from emotional trading. I know so many of us, including myself, have let emotions get to us, and then the losses that resulted from it. And so because of that, we no longer have to be involved in our trades. So we can get rid of the emotions and get rid of the stupid losses that come from them. We can also get rid of the stress that comes from checking our trades 24/7. Who here thinks that sounds nice? At least that's my favorite part of the options auto trader. David here says that he says there's no more FOMO anymore. I use the auto trader and it places the trade for me and it follows the exact conditions I choose. So I never have to worry if I entered or exit at the wrong time, and I never miss out on a trade. He also says right here that using the auto trader or the options auto trader takes out the emotions and allows for rules to be followed. Guys, who here would love to remove the emotions of trading? You're like, Austin, I have these rules and these rules work, but I get in my own head, I get in my own way, and I mess up. And that's what the options auto trader is for. Get you out of your own way and allow the rules to work for itself. Bruce says the same thing, but I love Bruce because he's from New Zealand. And for those people who are not in the US who love doing this, they have to trade in the middle of the night or at very weird times. So now if you can automate that entire process, that means that you can actually sleep and let the auto trader trade for you, which is what he said here. He says it's an amazing system, A+++. I never even got that grade in school, but I guess I finally got it with this options auto trader, which is awesome. All right, so if all the options auto trader did was finally make you consistent income every month from options, would it be worth it? Ask yourself that question. If you could have a way to generate money consistently every month, would it be worth it? In my opinion, absolutely. If all it did was help you have true time freedom, meaning that you never actually have to be stuck to the screen again. You only have to look at charts if you want, but you know that your trades are protected, they're entered, they're hedged, all for you. If all that did was that and give you your time back, would it be worth it? Guys, some of you, your time is worth $50 to $100 an hour. And so it's totally worth it. But not only that, think about the amount of time you're not spending with your family, with your kids, or just enjoying the outdoors and enjoying life because you're stuck to a screen. So if all the options auto trader did was give you back that time, would it be worth it? In my opinion, absolutely. If all it did was give you the ability to sleep at night because you're protected from market crashes and finally have real stop losses, would it be worth it? Absolutely. So guys, you can get started now for just $197 today. you need to go to go.optionsautotrader.com/private offer. Now, for some of you guys, you may be saying, Austin, you always had the $197 per month deal for the Options Auto Trader. And well, you're right. The deal here is this. I'm giving you access to this. Again, is the page that you go to when you go to go.optionsautotrader.com/private offer. And I'm giving you access to the pro plan, the yearly plan for 50% off. That's equivalent to $83 a month. Guys, some of you guys are paying $197 a month for this offer. Even if you're current members and you're paying this and you want to pay way less, you can sign up for the yearly plan. Guys, this yearly plan has been here since I initially launched it in April. But now I'm getting rid of this plan because we're starting to get traction. And again, this is very cheap and I'm not really making money with this plan because it does cost a lot to run the Options Auto Trader, especially with the new data that I'm getting here soon. And so I'm removing this plan. But for the next 3 days, this option for 50% off the yearly plan is here. So if you're a current member and you want to save a lot of money, or you're new and you want to get the best bang for your buck, you can go to this website and sign out using the yearly plan. Does that sound good? Sound fair? Again, this is not only helping you automate your trading, regain your time, have stop losses, but you also save 50% in the process. So it's a no-brainer, okay? The Options Auto Trader does, though, require a Tasty Trade account. So again, if you have Schwab, TradeStation, E-Trade, something like that, you need a Tasty Trade account. I'm currently in the process, I should say, of adding Tradier, TradeStation, and E-Trade. So those 3 platforms are coming, and that will be slowly coming in steps over the next month to 2 months. So expect that to come. But that's exactly what's going to happen. But right now, if you want to get access to this, then you need Tasty Trade. If you are new to Tasty Trade, they will even give you a bonus for signing up. Guys, if you bring over $25,000 in a new account to Tasty Trade, they'll pay you $500 for being a new member. That makes the Options Auto Trader on the monthly plan free for 2 months. So it's really a no-brainer if you're brand new to Tasty Trade, all right? You'll also get 6 killer bonuses when you join today, and only a part of this offer, and I'm so excited to share this with you, and I'm only saving the best and the craziest bonus for last, so make sure you stay tuned. Okay, first I want to answer Douglas's question, which he says, so what happens after the yearly renewal? It'll just convert back to the monthly plan, so I'll convert back to $197 a month. So yeah, I'm not going to charge you a crazy amount after. Okay, bonus number 1 you get is the Options Automation Fast Track. I will give you access to and teach you all the options selling strategies that have the highest win rates and how to trade them successfully. You know how I taught you like this about the 112s? Well, I do that with every single strategy, and you can see that here. And I'll even be revamping those trainings since I have more data from the Options Auto Trader on each one of these strategies. So I can show you how to trade them the best. Not only that, but it includes the cheat sheets of when to trade each strategy, how to trade it, and how to automate it. This course will take you from beginner to pro in less than 24 hours. So if you're someone who's new, this bonus will give you everything you need. And so again, it will teach you how to do selling puts, 112 bear trap, iron condors, credit spread, selling strangles, and even how to do your own custom strategy. Not only that, but other people have been through this course already. And it says that I love your training. Thank you so much. And so people have learned a lot from this. So here's everything you'll get when you join and take advantage of this offer today. You'll get the Auto Trader Pro plan, a $1,970 value. If you go sign up for the yearly plan today, that is what it costs. But again, you can get it today for literally a fraction of that. Plus, you'll get bonus number 1, which is the Automation Fast Track course, a $2,997 value. That's a total value of $4,967, but you can get started today for only $197 a month, or if you take the yearly plan, only $83 a month. All right, I will be giving you the link to the 112 Trading Handbook as soon as I finish these bonuses. Bonus number 2, the one-on-one strategy creation call. So again, you can jump on a call with me if you have a complex strategy or you just want some help, and we can walk through what it is you want to do for your account. That means if you want the extra security of having me review your automation before before setting it live, then we can do that on your call. If you want help automating a complex strategy, we can walk through that together. And if you're an introvert and hate calls, don't worry, this is not a required call, it's optional. Okay, guys, I've worked with hedge funds to create their automated systems and to create different strategies, and I've been paid over $2,000 to do this for a Black Fur Fund. And so again, I know what I'm doing. So if you need help building a strategy, I'm here for you. So here's everything you'll get when you join. You'll get the Options Auto Trader Pro plan, a $1,970 value. You'll get bonus number 1, the Fast Track course, a $3,000 value. You'll get bonus number 2, a one-on-one strategy creation call, a $2,000 value. A total value of $6,967, but you can get started now for just $197, or take the yearly plan, and it's only $83 a month. Next, I'm so excited for this one right here. This will be a really great course that I'm putting together right now, and you get first access to it. All Options Auto Trader members do. It's called the Generational Wealth Masterclass. And so in this, I show you the proper steps you need to follow to manage, grow, and protect your money when we're talking about investing it in your investment accounts. The best accounts for it to be put in, the different buying powers for each, and how to best structure your money so that it lasts for generations to come. It also includes a detailed step-by-step video on how to use the Options Auto Trader for non-traders so that your kids and your wife can keep generating passive income with the Options Auto Trader even if you pass away. Guys, I know this sounds a little weird, and it's fine. I get it. It does. But I created this Options Auto Trader because I was getting engaged to my now wife, who was my childhood best friend, and I was like, what happens if I pass away? There needs to be a way for her to continuously make money, or for my trading account to continuously make money. And so that's why I created a way to automate these 112s to help out my wife if I disappear. This will just continuously print money. But the thing is, they still need to know how to kind of turn it off and on, depending on what you want to do. And so I'm going to be recording a step-by-step video that you can share with your kids, with your wife, to help train them on the very basics of it so that they can do this even if you pass away and still use it to make more money. And so it may sound a little weird, but I'm really excited for this because I'll be putting my wife to the test on this. And yes, she's watching this training. This is the first she's heard of it. So it's just funny. I wish I could see her face. Anyways, here's everything you'll get when you join today. You'll get the Options Auto Trader Pro plan at $1,970 value. You'll get bonus number 1, which is the Fast Track course, a $3,000 value. You'll get bonus number 2, a one-on-one strategy creation call, a $2,000 value. You'll get bonus number 3, the Generational Wealth Masterclass, how to make your income stretch, how to grow your accounts, and the best way to do that, a $2,000 value. That's a total value of $8,964, and you can get started now for just $197, or you can sign up for the yearly plan for only $83 a month, basically. Next, I'm super excited for this one too. Again, I am bringing on a tax expert as well if I can. I've reached out to a couple already, but I'm putting together an in-depth course, and I'll hopefully be doing a live training with it for all Options Auto Trader members so that we can answer questions too. But again, I'm going to show you how to cut your trading taxes in half if possible, or at least as much as possible. And so it's going to be a detailed and live masterclass on how to legally, that's the point, cut your trading taxes in half. And I will give you recommendations on what to do based on each of your account, based on your account size. But obviously, the larger your account size, the more room that or the more things that we can do. And I'll also be showing you how to write off commissions as an expense, and so that you can knock that off against your profits and other things like that. On this live training that's coming, that I'll be doing soon, I still haven't released the times yet. There'll also be a Q&A session. So if you're someone who hates the IRS and wants to pay as little taxes as possible, this will be the training for you. And so you're going to get access to that live training when you sign up today, and for all Options Auto Trader members. So you get the Options Auto Trader Pro plan. You get bonus number 1, which is the Fast Track course. You get the one-on-one strategy creation call, which is a $2,000 value. You get the generational wealth masterclass to show you how to make your income and wealth last for generations. You get the cutting your trading taxes in half, which could literally save you $5,000 to $50,000 a year, depending on how much you make. That's a total value of $10,961, and you can get started now for just $197 a month, or even upgrade to the yearly plan, which that discount is expiring soon. That's literally only $83 a month, which is literally a no-brainer because you can make that back times 10 with one 1-1-2 trade. Not only that, but you get access to a VIP ticket to my option selling summit that I'm doing in December. So again, you'll get a free ticket to that, which is going to, I'm bringing on some of the top option sellers online to put together a summit for them to reveal their exact strategies and how they trade it. And you'll be able to get access to all those trainings for life. And so I'm so excited for that. And so that's, again, what you get when you join today is the pro plan, the fast track course, the creation call, the generate wealth masterclass, the cut your trading taxes in half, and the VIP ticket to the option selling summit. That is a total value of $11,258. Guys, my whole goal when I'm doing this is to make it a no-brainer, to give you so much value that you make money, save time, save money from taxes, all this stuff at a fraction of the price so that you get the better end of the deal. I work my hardest, you pay a little, and you get a lot. And so with that, you can get started now for just $197. So the last and favorite bonus I have is the plug and play strategy database. This gives you access to my top strategies, passive income strategies, and zero DTE strategies. So if you're someone who's like, Austin, I'm new, I don't get it, I just want to do one click, import a strategy so that I know what's going on, or I can just easily import something and use it that works. This is what that is. You can pick from our proven templates and trade it from there. This allows you to install high win rate trades that are based and backed on real trading data and back tests with one click. It allows you, if you don't have a strategy or you want a more consistent one, to have access to over 10 proven strategies. Neil used one of our proven strategies, and he's making $1,300 a month now. David did the same thing, and he made $2,600. And again, this stuff does work. So when you join today, you get access to the Options Auto Trader Pro plan, a $1,970 value. You get the Options Fast Track course, a $2,997 value. You'll get the Creation Call, a $2,000 value. You'll get the Generational Wealth Masterclass, a $1,997 value. You'll get access to the live masterclass training of how to cut your trading taxes in half, a $2,000 value, and the VIP ticket to the Option Selling Summit, a $297 value. And last but not least, the plug and play strategy database, a $1,997 value. There's a total value of $13,255, but you can get started now by going to go.optionsautotrader.com/private offer, or the link is in the chat to get started today. Now, guys, you have two choices. Do nothing and not take this leap of faith, which is 100% risk-free, or the second option, make this small investment, which is literally super small, compared to everything you get in return, and just give it a shot, right? My business motto is this: if I can't make you money, then I don't deserve yours. If for any reason you want a refund, just ask. I always give refunds because my goal is to make this as easy as possible. And I know this can work for you if you implement it. And if you feel like it doesn't, well, then no worries. Let's just cross on equal footing. Okay. So you get a 30-day money back guarantee. So if you sign up today, and if in the next 29 minutes or 29 days, you don't like it, I'll give you all your money back. Just a reminder, the Options Auto Trader requires a Tasty Trade account at the moment. We have other ones coming like E-Trade, Tradier, and TradeStation. Those are the next three coming. Tradier is coming first, most likely in the next week or two. But again, right now, if you want to get access, it's Tasty Trade. And if you're a new account person, then you can actually get paid to sign up, which will make this program free. Okay, thank you guys so much for staying tuned, learning all about 112s and hearing about the amazing offer that I have that's expiring in 3 days. I just wanted to make sure you guys are aware of that because it's literally an insane deal. Literally, if you sign up for the monthly plan, that's $197, really $13,000 worth of value. And so to reward you guys for staying here, literally, this covers my whole entire training and all that stuff. And literally everything you need to be consistent with 112s is here. So it's all this stuff, plus an in-depth breakdown of entries, exits, hedges, and all that stuff. So let me get the share link here for you. Make sure to share with everyone, copy link. All right, I'm gonna put this in the chat. All right, there we go. The link to this Google Docs. Oh, we have 2, 3, 4, 5. You guys are all on this. Awesome. So that is here. Been a huge fan of yours since the early days. Speckable Stock Software, had your respect for years. Thanks, Liam. I really appreciate that. I always tried to do my best to over deliver and make things right. Wow, 15 of you guys are already on here. All right, we're about to get into the Q&A session to answer all your 112 questions and options auto trader questions. So stay tuned. This is the Q&A time. Please put your questions in the chat box, and I'm going to answer some ones that I've seen. So Steve says, this is from a while back, I converted half of my 112s into ratio hedges, but the take profit from the old 112 is still set at the original take profit. How do I get it adjusted to unlimited? That is something that I'm working on and will be fixed here soon. Douglas says, can we sign up if we already have our membership becomes effective? Yeah, so you'll want to wait to sign up until Tradier and TradeStation is online. Just to be clear, Tradier does not support futures options. So if you want to do the 112 strategy, you can only do it on either Tasty Trade or TradeStation broker and integration, because those are the only two brokers that support futures options. Dennis said, what if I need more than 10 auto traders? Well, then you can just upgrade to the unlimited plan, which you can already do inside the platform, and then you can get unlimited auto traders. So the next plan gives you unlimited. Jonathan says, when you talk about an 80% profit target, is that based on 80% of the max profit, the trap, or 80% of the initial credit received? Always 80% of the initial credit received, because you might never hit the 80% of the bear trap. I'm not used to talking this long, man. My throat hurts. I'm glad I have some warm stuff here. Anyways, Taranis O'Keefe says, how far back does your back test go? Basically, everything bullish has worked since 2023. Yeah, that back test and all the data that I'm showing you was 10 years from 10 years ago. So what's that now? 2014 to now. And so yeah. Are options trade taxed like stock trades? Yes, they are. But the 112 is amazing because we're trading it on futures, and futures is taxed way less. You can save up to 20% of your taxes by trading futures instead of stocks. So yes, you have less taxes when trading futures, but it's still taxed roughly the same. Frank says, do 112 rules for CL and GC the same thing? Yes, they are. They're the same rules because again we are playing off delta levels. And so again, they work regardless of the asset. Dennis says, is there a yearly discount on the unlimited plan? Yes, there is. Remember, you guys are getting an insane deal by signing up today for the yearly plan for the Pro. But if I show you here, this is the starter plan, Pro plan, and the unlimited plan. Again, all these bonuses today are only good with the Pro plan. But when you go to the yearly plan, you can see here you get 2 months free with unlimited or the Pro. But most of you guys are good up to 10 auto traders. You probably won't exceed it, but if you do, you get 2 months free with that. So hope that helps. Can this be traded in an IRA account? Yes, you can add a normal broker, an IRA, whether that's a SEP or a 401k if the broker supports it. But anything like that. And so for Douglas and Walt, yes, you can trade it with an IRA. Walt says, I currently trade 111s and 2 of my IRA accounts. Does the account need to be a margin account or just large enough to handle the BP? Either large enough to handle the BP or margin. Because a 112 trade, if you don't have margin, requires a lot of money, which can work. But if you want to use less money, then you'll use margin. And then from there, it'll be good. But yes, you can do it. Key says, I'm already $197 a month member. I just signed up for the annual. You use the link. Congrats, Keith. Thanks for signing up. I know a lot of you guys are taking advantage of this huge offer, which is awesome. So way to go, Keith. Will there be an upgrade on the back end? Yeah, for all current members, there's not a seamless upgrade. But as soon as I get off this call, any current members who upgraded, I'll make sure to fix the subscription on the back end, so you'll be good. So don't worry about that, Key. If you give it about an hour, I should get that fixed. Sheila says, what is the buying power needed to do a 112 every week? Will this BP grow as we add a trade every week? No, BP only grows with risk. And so that's if the market drops, risk increases, or say volatility increases, and that's what increases the buying power required. So yeah. Just a reminder, one last time, I just want to say, guys, this amazing offer, go.optionsautotrader.com, is not available for long. Like, I am pulling this off soon. So make sure to go to that link. The link should be in the chat. And make sure to take advantage of this. Remember, the only way to truly know if this will work for you is to actually try it. So if you're trying to figure out if this works for you, then you need to actually just get in, and you're backed by a 30-day money back guarantee. Key says the options automation course link is not found. Yeah, no problem. I'm in the middle of moving that course inside the software. So I will be sending out that new update link here soon. Don't you worry. Is this offer available to current auto trader users? Yes, it is. You can sign up now. I realize I never answered Sheila's question, which is how much buying power do I need? If you're trading ES, that's 8,000 per trade. If you're trading MES, which is recommended for smaller accounts, then you're doing $800 a trade. Now remember, you want to do no less than or no more than 50% of your account, so you can keep entering trades as long as you're not over 50%. Is a cash account for doing 112s okay, or is the IRS going to be happier than me if I do that? I bet the IRS will be happier, just because you have to put up so much money to make that return. The margin on futures is what makes the trade so great. So you need a margin account really to get the full benefit of a 112. Douglas says, does Tasty require a separate futures account like Tasty Trade? No, you just do your normal margin, and then so you have your normal margin account, and then you just say, hey, I want futures on it, and then that account gets approved for futures, but it's not a separate account like TradeStation. Cash is in a regular trading as opposed to an IRA. Yeah. As long as you have margin, you're good to go, Todd. Hey guys, please let me know what questions do you have, because I want to make sure that I can answer all your questions about the options auto trader, because this offer at go.optionsautotrader.com/private offer is literally the greatest offer I've ever created. Why? Well, because you get access to another live training. So if you liked how in detail I went in this live training, you'll get another one of those, but for saving money on taxes. And who doesn't want to learn that? So you get that for free when you join the options auto trader, which will already help you save time and make more money. So again, this is the greatest offer ever, and it will not last long. It's closing in 3 days, and you will never be able to get the 50% offer again. And so I want to make sure you guys take advantage of it now. So Kenny says, how long are today's offers good for? So again, it's good for the next 3 days to take advantage of all these bonuses. And also after the next 3 days, so I should say Sunday at midnight, these bonuses will disappear. So again, you can still sign up for the options auto trader, but the bonuses are going away. Please let me know any other final questions. And while I wait on your questions, just a reminder of everything you get when you join today. You'll get the Options Auto Trader Pro plan, a $1,970 value, the Fast Track course, a $3,000 value, the one-on-one strategy creation call, a $2,000 value, the Generational Wealth Masterclass, a $1,997 value, the Cut Your Trading Taxes in Half, a $1,997 value. You'll get the VIP ticket to the Options Selling Summit, a $300 value, and the plug and play strategy databases. I spent a lot of money going through courses and YouTube videos and learning, and all that learning is being put in there for templates that are just plug and play now. So the total value of $13,255, and you can get started today for only $197, or you can even grab the 50% off for the yearly plan, and that literally makes it $83 a month, which is insane. So any other final questions, guys? I will stay on here as long as you guys have questions. So please put your questions in, either about the options auto trader or 112s, and I will do my best to answer. Q&A time. Are there any hats left? And if my wife wants to try this option, can she use mine? Yep. Again, you guys are married, so you have the same account. So yeah, you can definitely have your wife do it, and I'll send you out a hat. Actually, you know what? Let's just do a surprise bonus for everyone who signs up today. I will also ship you out a hat as well, which is an Options Auto Trader hat, which typically I have near me, but my wife doesn't like when I wear hats, so there's no longer one in here. But yeah, the Options Auto Trader hat, which I will send to everyone who signs up today. Michael says she has her own account. Yeah, you can add multiple accounts inside the Options Auto Trader, especially for the Pro plan. You can add up to 3 accounts. The unlimited plan, you can add unlimited accounts. And so again, you can add your broker, her broker, and then an IRA account if you want. Curtis says, I'm unclear how existing members take advantage of this offer. Yep. So if you're currently on the $197 a month plan as a current member, and you want to save money by upgrading to the yearly and get 50% off, you can do that by going to go.optionsautotrader.com/private offer. You'll get the discount, and then I'll update in the back end to reflect that. But any current members can sign up right now before the offer ends. And well, yeah, that's kind of how that works. I will send everyone who signs up today a hat. That's an undisclosed bonus offer I wasn't planning on doing, but I will do that. I will pay for the cost of the hat and shipping and ship it out to you. But first, let me just say it's only going to be for people in the US, because no offense, outside the US is so expensive to ship. All right. Any other final questions before we call it a go? I don't want to let you guys go. Please let me know what questions you have about 112s or the Options Auto Trader, because I want to make sure I get your questions answered. For people saying, well, I'm trying to decide if I want to do this or not. Well, the only way to decide, you only need information to make a decision. If you don't have the information, where do you get it? Well, I'm here. I can give you all the information you need to make the best decision. So let me know. Bing says, how do you manage theta and net lick for 112s? Great question. Theta and net lick are important, but they're not key factors. Again, you can see all that data here on the Options Auto Trader, like my net liquidity here. But what I'm really doing is I'm watching my buying power used, right? I don't want this to exceed 50%, right? Like I typically I was sitting around 30%, but then it bumped up about 17% with this drop. So that's kind of how it was, but I want to stay here around 50%. And then again, I can watch data elsewhere. But again, I see all my information here. So you can see here my delta, again, very delta here. But again, I also have $680 of theta. So that means every single day, regardless of what the trade does, I make $680 from theta decay, which is a good amount. So again, it shows that all there. So again, I hope that helps answer that question. Douglas says, what was the minimum balance to start? Again, 5,000 I think is a great level, because you need enough for a margin account. And so again, a margin account needs at least 2,000. But if you want to do this well and start with MES, you need about 5,000. Bing says, is there an alert for buying power restrictions? Yes, you get an alert for everything. Don't you worry. You get an alert when all your auto trader rules have been met, when a trade is being placed, when a trade has been placed, if your buying power limit has been hit and that it won't exceed it. Anything you need to know, you will receive an update about via email automatically. Todd says, if a 112 is set to go off on a red day like yesterday or today, would you interrupt the schedule or feel bad if the drop came after the trade? Would you interrupt the schedule or feel bad? I don't know if I'd feel bad. If I enter on a red day, I enter on a red day. It doesn't matter if the next day is red too. Entering on a red day gives you a huge advantage. And I can just show you here. These two trades, okay, here, these two trades were literally placed 2 days apart. This trade was entered on a green day, and this trade was entered on a red day. With the market dropping as much as it did, this one is only down 45%, while this one's down 145%. Entering on a red day gives you so many advantages, and one is that volatility is already baked into the trade, so that you lose less when the market drops. So entering on red days helps you make more, have a higher win rate, and is less volatile when the market is headed down. So if you can enter on red days, I always recommend you do that. Again, if you're using the auto trader, there's actually a setting that you just say, hey, I want to enter on only red days. You click that, you enable it, and then it'll do it for you. What if I only need the basic level? Well, then you can reach out to support for the link, but you won't get any of the bonuses mentioned in this deal. So yeah. Yeah, well, send me an email at hello@optionsautotrader.com, or just reply to any of the emails that I've been sending about this training. Liam says, for those doubting, you only have to look at Austin's record, going back on the impeccable stock software to judge his outstanding record. Come to your own conclusions. Thanks, Liam. As mentioned, my goal is always to make sure that you guys have the best success, because if you guys have success, then I will be successful, because selfishly, I think that if I can make you guys profitable, if you guys can make money, then you'll talk about me and then more people will know. So it's a selfish reason to help you guys out, but that's it. And I'm glad you appreciate it. And Douglas says, is there ever an instance that we have to manually close these positions? No. You put on this trade and then you let it ride. Take profit or stop loss, you let it ride. The only reason you would want to close a trade early is if you didn't follow the buying power rules, and now your buying power is being exceeded. You want to make sure that you close a trade to kind of offset that buying power, so that you can lower that requirement. But once you're tracking a trade here, you can either close it in Tasty Trade and it'll update here, or you can just click on the red X here and you can just close the trade with one click. Or you can just close a certain trade and turn it into a hedge yourself. Whatever it is you want to do, you can do that here. Frank says, do you have any strategy templates that are mainly volatility plays and not data plays? That would typically be a strangle. You typically use strangles for the volatility plays. But you can also do, I guess, buying options. This currently does not support buying options, only selling options, because selling options has the highest win rate. And so currently you can't buy options. But anyways, any other questions? Look, there's 43 of you guys still on here, which is awesome. If you haven't yet, go check out the offer, go sign up. It's amazing. If at least sign up for 1 month and get access to the free training on how to do cut your trading taxes in half, because that will save you way more than the $200 as being a member. Oh, people can draw on there. That's so cool. I've never really done a meeting before, so I don't really know what you guys can do, but it looks like you guys can do a lot. Yeah. Let me actually remove that. Disable annotations. Any other questions? Oh, I can also annotate. That's cool. All right. One more time before we end this here, I just want to remind you guys of what you guys get when you sign up today. And this offer is only good until Sunday at midnight. Is you get the Options Auto Trader Pro plan. And again, if you're a current member, you can even sign up and save money with the yearly plan. You get bonus number 1, which is the fast track course. Bonus number 2, a strategy creation call. You get the generational wealth masterclass at $1,997 value. The cut your trading taxes in half live training, a $2,000 value. The VIP ticket to the option selling summit. in the plug and play strategy database. A total value of $13,255. You can get started now for just $197 by going to go.optionsautotrader.com/private offer, and that link is in the chat. All right, guys. Thank you so much for tuning in. I'm so glad I was able to teach you this. I truly believe and know that if you take everything that I taught you on this training and even do it manually, it may take a lot of time and energy, but you will have success with it. So go put it into action, and I can't wait to see the results you have. All right, guys, thank you so much for watching. I will get this recording edited and out to you guys later tonight for those who want to re-watch it to take notes on certain sections. And also, sorry, don't forget that this offer ends soon, and it's literally insane. So sign up if you're not a member yet. All right, guys, thank you, and see you on the next training. Bye, guys. Oh, I love seeing all the people. A meeting's cool. I can see faces. All right, see you guys.